Generally, our economy continued to be resilient. As you know, we grew by about 5.5 in the first half. We are looking at, this year overall at between 5.5 and 6. Of course, we are waiting for the statistics from the Kenya National Bureau of Statistics, which will be coming towards the end of this month, and that will, give us, how we are performing. In terms of the macro stability, there's generally inflation still is within our band, at least for the figures for November. We're yet to see how December will look like. As you know, exchange rate has largely been stable at around 102 to the dollar. Interest rates now have come down and are now in a range that were there about 6 months ago. The domestic financing has also improved significantly for this financial year, and we've been able to execute our budgets without any challenges. I think overall on the performance of the program, most of the performance criteria are on track, and we'll continue to complete the remaining structural benchmarks going forward. Kenya was among the first countries to accept a review by IMF with respect to fiscal transparency, and we want to thank the fund for the support of that analysis. We're looking forward to some of the recommendations there. I mentioned this because we want to be as transparent as possible in the way we report our fiscal numbers, so that you don't read our Eurobond upside down and all that, the way we report it. So I want to say that we are very keen. Some of the recommendations there are important in terms of how we communicate our numbers to the general public, and I want to say we were the first countries to accept that to be reviewed, and that indicate how we are ready to ensure transparency in how our monetary, our fiscal numbers are reported, and also in line with international best practice. And I want to mention that the way we've treated all new borrowings, be it from our development partners, be it from any sovereign bonds and all that, is in line with our international standards. If you doubt that, you can also look at the IMF website. They have published similar tables, similar treatment, and there is this talk of saying that our numbers are cooked in a way to hide some of the numbers is not correct. I think we've indicated that, we have shown it before, and I would like to say that with the work that the assistance we are getting in that, I think we should be enhancing our transparency in the way we report on our fiscal statistics.
The economy is projected to continue to expand robustly, also at a slower than projected pace. Real GDP is projected to grow by 5.6% in 2015, driven by public infrastructure spending, buoyant credit growth, and strong domestic demand. But the growth acceleration in 2015 is slower than projected under the program due to delays in planned road infrastructure spending, weaker tourism receipts, and volatile external capital flows. At the same time, inflation rose to 7.3% in November, close to the upper end of the authorities' target range. Real GDP is projected to grow by about 6% in 2016, which is an acceleration in the growth rate, on account of the continuation of strong investment momentum, effects of good rains in agriculture, and a pickup in tourism following removal of travel advisories from major tourist source markets. Kenya's growing integration in global financial markets has created significant opportunities, but has also made the country more exposed to global market developments. Although the external current account deficit is projected to decline to 8.5% of GDP in 2015 from 10.4% in 2014, the current account deficit remains high and requires significant foreign capital inflows to be financed. Despite significant volatility of external capital flows in 2015, gross international reserves remain adequate at about 4 months of projected 2016 imports.